I'm Mark Draper. Joining me is Dom Guiliano, Portfolio Manager at Magellan Financial Group. Today we're talking about the European banking system and potential impacts on the Australian banking system. There was some discussion last year, Dom, that Apple Computers was worth about 3/4 of the whole value of the European banking system. So how do you see solvency in the European banking system, and what action do you see happening going forward from here with banks over in Europe?
Yeah, look, it's definitely true that the European banks to date have had weaker capitalisation than many others around the world. The US took care of its issues back in 2009, and the Europeans have had a couple of goes and haven't had much credibility in the markets in terms of actually getting the banks to a capitalised level which people are happy with. Now, there's really a couple of issues there, and one of them is that European banks hold an incredible amount of European sovereign debt. So if you don't get certainty on what that European sovereign debt is worth, how on earth do you get certainty on what amount of capital the bank should be holding, right? So that's part of the issue. But it's also true to say that a lot of banks in Europe have been over-leveraged and undercapitalised. Now, this issue is being addressed.
It's being addressed at the moment.
Okay, so there's a body called the European Banking Authority which put together a test for capitalisation back in the middle of last year, and there's been a number of criticisms as to the rigour of that test. But in any event, what they have done is significantly lift the bar in terms of the amount of capital that banks do need to hold. And they have to get to a capital ratio of about 9% by the end of this year. Now that's actually quite a lift in some instances. There's probably three ways that banks can get there. One is to go out to the markets and raise equity capital. Two is to actually sell businesses, so sell subsidiaries and pocket that money. And the third way is to deleverage, so stop giving loans. Exactly, you cut back credit lines. So you're seeing all three of those things take place. And the bigger banks, the ones with real franchises, are finding it easier to do. But there is a layer of smaller banks in Europe that are having significant problems, and in these instances, governments are stepping up to the plate and helping.
And so what are the signposts that investors would look for to say that we're through that process of bank recapitalisations?
Okay, so getting back to an earlier comment, people really do need to see some stability on the sovereign debt issue. So if people are comfortable that Italian debt is worth X and Italian banks own so much Italian debt that is worth X and they're properly capitalised for that, people feel comfortable about that.
Can you give us a brief comment on what you think the impact of the European debt crisis is on the Australian banks?
There's probably two areas that I'd touch on. The first is that Australian banks as a group are amongst the largest borrowers in fixed income markets in the world. It's not a fact that people often know, but it's true. And because they have to borrow on a global scale, means that they're impacted by wholesale funding rates around the world. And given the crisis, first in the US and now in Europe, it's caused a lot of skittishness on world markets, and people are demanding more in terms of interest rates, and also a little bit tighter on the amount of money that they're given out. So the Australian banks are having to pay up more on wholesale funding, and that just is fact. And that is causing some compression on their net interest margins. To try and avoid that, you're seeing the Aussie banks try and pass that sum back to consumers and businesses, and you saw what happened end of last week. Virtually all the Big Four came out and have increased the interest rates on mortgage loans. So they're trying to push that back. If you think about that on a macro environment, cost of borrowing goes up for everyone in Australia. It's going to cause a slowdown in housing markets, in economic activity, consumption, all the rest of it. So there's a definite flow-on effect which is coming through to Australia. And the second point is that the deleveraging in Europe means that, as we were discussing earlier, ING has sold some assets. There's a bunch of European banks which are looking to sell assets up in the Asia-Pacific region. It does provide pockets of opportunity for the Australian banks to go out there and buy some assets, hopefully at good prices.
Yes, that's great. Thanks, Dom. We'll be providing with more information on the European banking sector and the Euro debt crisis as more information comes to hand. But thanks for your time, Dom.
Pleasure.